Swayam Prabha. Digital India. Educated India.
The next topic, or the last topic what we are going to talk about, is budget, flexible budget and variances, the entire thing put together. I want to spend some time on this. Let me explain briefly what is the budget, how does it work, and let me do some numerics on that. I just got some slides as you can see on the screen. I have again picked up most of these materials from a textbook because so that it's easier for you to understand. Budget is nothing but a detailed quantitative plan, that's all. It's a detailed quantitative plan. Basically, normally budgets are for a period of 1 year. Some organizations, they always have what is called as perpetual budget. That is, at any point of time, there will be 1 year budget. That is, for example, the month of December is getting over tomorrow. I will, as of now, I have a budget ready from Jan 24 to December 24. Now, moment I enter Jan, I will add 1 month's budget. That is, I will have a budget ready from February 24 to February 25 out there. So, whatever, end of Jan 25. At any point of time, I keep adding 1 more month and keep deleting off the 1 month. That is what we call it as a perpetual. Perpetually, they will have 1 month, 1 year budget ready, 1 year, 6 months, whatever is the organization's policy. Normally, it covers 1 fiscal year out here. When we choose budget period, that's what I said, continuous budget, 12-month budget that rolls forward 1 month or 1 quarter or what do you call it as the current month or quarter is complete. Rolls over, it keeps adding. Operating budget covers normally 1 period out there, and they divide their annual budget into multiple quarters. 4 quarters, monthly, depends on the organization's policy. It can be quarter, it can be month, and so on and so forth out there. Now, is budget driven top down or bottom up? Both. Why both? Because, for example, imagine I have to look at the estimation of my production activity. Can it be driven from the top? Yes. Do I require from the bottom? Yes, because I need to know, given the constraints, what is the number of material, number of output, that number of units that they can manufacture. That has to come only from the bottom. Why it has to come? Because the purchase fellow will tell me how much material he can procure given this particular thing, given the price fluctuations, given the availability in the market, etc. Then, based on that purchase, what is the material availability, the production plan will basically plan, given the machine time, downtime, etc., etc. Now, to do the production, the sales fellow will have to tell what is the volume that I can sell in the market. Moment they say this is the volume that I can sell in the market, given the constraints and competition and everything, the material fellow will say, okay, this is the sales I can procure this kind of material. If this is the material he can procure, then what happens? The production fellow will say, I can manufacture so much, and that feeds into the top. The top management can say, no, this is fine, but I am going to aggressively push. The sales fellows will have to increase the volume by some percentage and then rework on the budget out there based on the expected target set by the top management and so on. So, information flows from the bottom, that's what, as you can see in the slide, from the supervisory level to the top management, as well as it also moves the other side also out there. Budgets, it's basically what we call it as, it's a interactive process where information is collected, assimilated, understood, and then basically sort of reworked, and then a target basically set based on that. This slide is very clearly evident. I said the sales budget. The sales, once I have the number of units they can sell, that drives my production budget. Once I know that is going to, I know what is the amount of production I have, that's going to drive my materials budget, as you can see on the right. That's going to drive my overhead budget. That's going to drive my labor budget. That's going to drive my inventory budget, ending inventory, because I need to maintain some buffer stock. All these eventually are going to drive my cash budget out there, because when I buy material I have to pay, when I pay for labor I have to pay, when I sell I am going to get money. What is the time lag in all these things? What is the credit I give for sale? What is the credit I get for purchase? All these things will get fed into it, and then the cash budget comes in, and finally from the cash budget flows what is called as your income statement and balance sheet. So what I've got to, what we are trying to get is, it helps you get some kind of a big picture out there. Let us start. I'm going to start with what do you call it as some exercise out there, where I'm going to start with preparing sales budget alone for a quarter. I'm just looking at one quarter, and then drive towards the inventory budget, drive towards the production budget, and then how these things get cascaded out there, how these things are linked is what we are going to see in the process out there with the help of some numericals. That's what we are going to see. So it helps you provide some kind of a big picture, that the 10 schedules in the master budget. What is the 10 schedules in the master budget? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 out there. All these things you count, schedules. Sales, ending inventory, production, selling and administrative budget, direct material budget, labor budget, manufacturing overhead budget, cash budget, P&L, balance sheet. So it basically, the input also comes from the sales fellow who is on the field out there. That is where I keep getting inputs, assimilate, understand, collate everything, and then get the ultimate output, what I am basically getting in this particular case. It answers some of the questions. How much revenue will you earn? What is going to be the cash? How much selling and administrative expenses I am going to look at? How much money I am going to borrow? Because cash budget you need to borrow. How will the balance sheet look like? I am going to add some more questions out there. So what we call it as a master budget, when we collate all these things, put everything together, sales, production, ending inventory, collection budget, my labor budget and so on and everything, and then finally arrive at the P&L and balance sheet. That is what we call it as a master budget out there. It answers what are the budgeted sales, what is the selling price, what is the, then I can go on tinkering with what do you call it, you want to increase, alter the selling price, alter the credit period, alter the what do you call it, number of units I want to keep as inventory. All these things I can keep altering to ensure my cash is sort of, my borrowing is relatively less, my cash flows are fine, my operations are going to be fine. Once I have this budget, I know where to tweak out there. So that is where we use budgets out here. So let us take some small examples in this case. I am going to look at very small examples out there. Let us look at one. Beach Corporation is merchandising company that is preparing a master budget for the third quarter of the calendar year. Third quarter of the calendar year. Please note, the calendar year is what for? That is calendar year. July, August, September. The company's balance sheet as of 30th June is given below. This is the company's balance sheet as of now. Assets, liabilities, everything is fine. Beach managers have made the following additional assumptions and estimates. The sales they have estimated out there for July, August, September, October. October also I have. All sales are on credit and all credit sales are collected. Each month's credit sales are collected 35% in the month of sale, 65% in the following month of sale. All of the accounts receivable at 30th June will be collected in July. That is, accounts receivable on 30th June will be collected in the month of July. Each month's ending inventory is 30% of the cost of the next month's sale. Cost of the next month's sale. The cost of goods sold is 60% of the sale. For example, this is the sale value. 60% of this 2,10,000 is the cost of goods sold, COGS. And they are given this. The company pays 40% of the purchase in the month and 60% in the following month. Monthly selling administrative expenditure are so much. And then the company plans to borrow or pay, the company does not plan to borrow or pay declared dividends and etc. etc. You are expected to look at cash collections, because I need to know ultimately merchandise purchase budget, cash disbursement budget, and then what you call it as income statement and balance sheet out there. And then what you call it, income statement and balance sheet. And then what you call it as income statement and balance sheet out there. Let us go ahead with this. Let us go ahead with this. Let us sort of try and see if we can prepare this particular thing out here. Have I divided this? Yes, divided the screen. Always comfortable because so that you can see both. In this case, let me look at schedule of cash collection. That is the first thing what they want. So, let me do the schedule of cash collection. What is it for the quarter? What is the quarter out there? July, August, September. And then I have it for the total quarter. For the end of it. Okay. Let me know what is the expected sales for each of these months out there. Sales, expected sales for each of, or budgeted sales for each of these months. It says 210, 230 and then 220 in this particular case. 210, 230 and 220 in this particular case out there. Let us sort of look at that particular aspect out there. That's a 210, 230, 220. So, what is the total sale out there in this particular quarter? The total sale in this particular quarter, total sales is about 6,60,000. But we see this, all of the accounts receivable on 30th June will be collected in July. So, let us look at what is the collection in, what is the cash that is going to come to July. That is, we will say that is accounts receivable of month of June, or as per the balance sheet, is going to be collected. So, what is the month of June accounts receivable? We see it is about 1,36,000 is going to be collected. Next we do the next step. Further it says, all sales are in credit, credit sales are collected. Each month's credit sales are collected 35% in the month of sale, 65% in the following month of sale. So, what is going to be the what is called as the cash collection, that is cash collection in the month of sale out there. What is the sale? 2,20,000 is the sale in the month of July. What is the percentage you are going to collect in the month of July? 35%. 35% of it you are going to collect in the month of July itself. Now, what is the cash collection in the following month of sale? In the following month of sale, that is, what is the cash collection in the following month of sale out there? That is, 65% of the sales of July is going to be collected in the month of August. That is what I am looking at, 1,36,000 in the following month. Same way, if I go for August, what is the cash collection that is going to be collected in the month of sale? 0.35. What is the collection that is going to happen at the end of what do you call it as in September? I am going to look at 65% of this is going to be collected in the month of August, in the month of September. For the September sale, what is going to happen? 35% of it I am going to collect in the month of September. So, what is the total collection I have had in the month of what do you call it as the month of sale? This is the total collection I have, and then I am just going to copy this out here because I need to know what is the total cash collection I need to have out here. Now, what is the accounts receivable at the end of the quarter? At the end of the quarter, please note, September sale 220,000. 35% of it you have collected. When you close the quarter, 65% of these 3,20,000 you are yet to collect. You are yet to collect, I am sorry. You are yet to collect. Say 143 plus 77 is 220. So you are ready to collect. This is the accounts receivable at the end of the quarter. This is what is the collection. So what is the total cash collection? In the quarter, the total cash collection in the quarter is, I will know that it's going to be that this is the sum of all this is the total cash collection in the quarter, that is 653,000 is the total cash collection in the quarter. Now why do I need this? Supposing you feel that you might require a little more cash. Then what happens? I will go ahead and alter this 35 and 65% out there. I can alter this 35 and 65. I might alter this 35 and 65%. Possible. I need to tweak with this. I feel I have excess cash. I can give a little more credit. If I give a little more credit, will my sales increase? Yes, I can say 20% I will collect in the month, and then 80% I will collect in the following month. Then my sales will increase from 210 to 250. Yes, then I can do that tweaking. So moment you have this, the amount of cash you require, amount of cash you need, you can look at playing around with a lot of other things out there. Now as we go along in this particular case out here, the second question, prepare a merchandise purchase budget out there. Also compute the merchandise purchases for the end of the quarter, September out there. Let us look at merchandise purchase budget. Let us see merchandise. Now let us say I have the same three months out here. I am just going to color it differently and then make it bold so that it's going to remain. I am just going to use the same 3 months out here. What is the cost of goods sold? That is, I need to look at purchase. To know the purchase, I need to know what is it that I am going to utilize. To know what is it I am going to utilize, I need to know what is it I am going to, I need to know what is going to be the cost of goods sold. That is budgeted cost of goods sold. Go back here. It says that each month ending inventory is going to be 30% of next month's sale. The cost of goods sold is 60% of the sale value. That means, what is the cost of goods sold for the month of July? If I look at it, it's going to be 60% of the month of the sale value out there. What is going to be the cost of goods sold for the month of August? It's going to be 60% of the month of sale of August. What is going to be the cost of sale for the cost of goods sold for the month of September? It's going to be 60% of this. So what is the total cost of goods sold for the quarter? 396,000. It also says that each month your ending inventory is equal to 30% of the next month's sale. So I need to know how much of goods I need to keep, how much of goods I need to purchase, how much of goods I need to procure every month. But I also need to maintain a minimum stock, ending inventory. Ending inventory should be 30% of the next month's cost of goods sold. That means, if I have to say that in this particular case, desired ending inventory for each month, let us look at what is the ending inventory desired. This is the cost of goods sold of the month of August, 30% of it is what I prefer to have. Whereas when I move to September, August, this is the month of cost of goods sold in September, and this is the desired inventory I need to have, 30% of it. Now I move to September. Sir, I don't know what is the cost of goods sold in October. You have the data. They have given the sales data for the month of October, 2,40,000. Sales data for the month of October is 2,40,000. What is the cost of goods sold? 60% of it. What is the cost of goods sold? 60% of it. Of that you got to have 30% out there. Of that you got to have 30%. So I have my desired inventory for every month out there. That means, what is the total material requirement each month, or what do you call it as the total requirement for each month out there. What is the total requirement? Total requirement is ending inventory I have plus budgeted cost of goods sold I basically have, and then what is the total requirement out here? This is the budgeted sale, and this is the ending inventory plus this is the budgeted sale I have. Total requirement. My total requirement, if I look at in this particular case, will be slightly more or less. But do I need 1,77,600 to buy in the month of August? No, I don't have to buy 1,77,600 worth of material, because I already have bought out of this 1,77,600. I have already bought 41,400 in the previous month. So what happens? What do you call it in this particular case? Less beginning inventory. What is the beginning inventory? In this, if I look at the balance sheet, there is an inventory of 62,000 as of 30th June. That means that becomes the beginning inventory for the month of July out there. For the month of July, 62,000 is beginning inventory for the month of July. So how much do I need to procure? My requirement is 1,67,400 for the month. I already have an inventory of 62,000. So I need to procure. I need to procure, what do we call it as? I need to procure inventory only to the extent of about 1,05,400 in this case. The same thing. For the month of August, what is the beginning inventory? The beginning inventory is the ending inventory of the month of July becomes the beginning inventory for the month of August. So what is it I need to procure? Out of 1,77,000 minus this inventory that is already there, I need to procure only so much. What is the, if I look at what is the beginning inventory for the month of September? What is the ending inventory for the month of August? Beginning inventory. How much do I need to procure? This is the total requirement. This I already have in the inventory, and this is all I have to procure. So what is the total procurement for these 3 months put together? This is the total procurement you will have to do. Budgeted cost of goods sold is different. Procurement is different. Total requirement is going to be different in this particular case, and that's what we see. To be, if you look at, prepare a schedule of expected cash disbursements for merchandise purchase of July, August, September. Also compute total cash disbursement for merchandise purchase for the quarter December 30. Let us look at that. Now I move to the next schedule, that what we call it as schedule of cash disbursement for purchases. For purchases alone, let's keep it this way. First thing, what is the, and it also says in this particular case, all accounts payable for June 30 were paid for in the month of July. So first thing, what you have to pay? Accounts payable. What is the amount of accounts payable as of what do you call it as July? As of end of June. End of June is 71,100. I have to pay this. Now I go back and read this. The cost of goods sold is 60, that is okay. The company pays 40% of the purchases in the month of purchase, 60% in the following month of purchase. 60% in the following month of purchase out there. So payment that is made in the month of purchase. In the month of purchase. What is the purchase made in July to procure? This is the purchase that is made in July. What is the percentage of payment that is made? 40% in the month of purchase. Payment made in the following month of purchase. What is the purchase made in July? What is the payment made for that in August? 60%, 0.6. What is the purchase made in August? What is it in this particular case? 0.4. 40% out there. For purchase of August, what is the payment that is made in the month of September? 0.6. For the month of September, what is the purchase? What is the purchase? Procurement. This is the procurement. What is the payment made? 40% of it. So, what is the total payment I have yet to make? That is accounts payable at the end of a quarter. Accounts payable at the end of the quarter is what? This is the total purchase in the month of July. It's September. 60% of it I am yet to pay. So, this is the, what do you call it as the, sorry, I should have done it here. 60% of it is what I am yet to pay, and this is what is the accounts payable for the end of the quarter. So, what is the cash dispersed at the end of the quarter out there? I am just going to do what is the cash dispersed at the end of the quarter. I am just going to do this, and that is all what I basically have. I am just going to total this. Cash dispersed at the end of the quarter in this particular case. What are the cash dispersed in the month of in the month of the quarter is going to be this plus this. I want to know what is the cash dispersed at the end of every month. I can just total these two. That is the cash that is going to be dispersed at the end of every month. So now I know what is the cash collection. My cash collection at the end of the quarter is 653. My cash disbursement is going to be 366. Comfortable. I can tweak a little bit here and there. Maybe, etc. Now I go to the next one, last statement out here, preparing the income statement and balance sheet out there. Let us prepare the income statement and balance sheet out there. Income statement for the quarter ending September 30. For the quarter ending September 30 out there. Let us look at, in this particular case, income statement. First thing, what is the income statement? Sales. What is the value of the sales out there? The value of the sales in this quarter is there, 6,60,000 straight away from here. What is the COGS? Cost of goods sold. COGS for the quarter is right from here in this particular case. COGS, we did have what is called as the cost of goods sold in this particular aspect out there. That is what budgeted cost of goods sold, total cost of goods sold. This is the total cost of goods sold. So, what is the gross margin out here? This is what we call it as the gross margin. Now, I go back here. There are certain aspects. The monthly selling and administrative expense is 60,000. Each month 5,000 of this amount is depreciation expenses. Remaining 55,000 is related to expenses incurred in the month. Let's keep that aside. Now let's say less selling and admin expenses. That is 60,000 is the sales out there. How many months? 3 months. That's it. So what happens? My ultimate profit or loss in this particular case, or net operating income, is about 84,000 is what we get out here. Next, I will go to the balance sheet. Balance sheet as of September 30th out there. Balance sheet as of September 30th out there. That is what I am going to do work on here. Balance sheet as of September 30th. To get the balance sheet as of September 30th, I need to know what is the cash balance. Let me work by the side out here. I am doing what do you call it as the calculating what is the cash balance at the end of the quarter. Cash balance at the end of the quarter is what I will look at calculating here slightly. Let us say cash collection. What is the cash collection? We have the cash collection out here. That is, in this say cash collection for the end of the quarter. This is the cash collection at the end of the quarter. Cash disbursements for purchase. Cash disbursement for purchase. Cash disbursement for purchase. Let's look at in this particular case. I'm just going to wrap the text. Cash disbursement for purchase out there, to procure. What is the cash disbursement for purchase? This is the this is the cash disbursement for purchase. Then what is selling and admin expenditure? Here what happens? Please note, 60,000 is the selling admin. In that 5,000 is depreciation. So actual cash outflow is only 55,000. Actual cash outflow is only 55,000 out there. So what is the what do you call it as? What is the cash balance that you will have from your operation? Cash from operation. Cash from operations, what you basically have at this particular stage, in this particular, one second. Yeah, cash from operations out here is about, what do you call it as, 1,01,060. There was also some cash balance at the beginning of the month, opening cash balance. I just add that. Opening cash balance of 90,000. So what is the total available cash balance out there? Available at the end of the month. Cash at the end of the month, end of quarter. Cash at the end of the quarter is basically going to be your, what do you call it, in this particular case of 2 lakh and odd, whatever is the number that we have basically got out here. 2,11,060. So now what happens? I am moving towards, what do you call it as, preparing, what do we call it as, the balance sheet out there. Let's go to the balance sheet in this case. Let's look at the same way: assets, cash, of course, yes, accounts receivable. What is the cash balance? We all know what is the cash balance out there. The cash balance we just calculated out here. This is the cash balance. What is the accounts receivable? You can actually look at in this particular case. Accounts receivable at the end of the quarter we did calculate here. This is the accounts receivable what I have. Then I have inventory as it is. We know what is the ending inventory out here. That is, we say in this particular case, desired ending inventory at the end of September. That is going to be the inventory that I am going to have. Oh, I didn't do this. Desired ending inventory out here. That's going to be the ending inventory out here. Then I have what is called as my PPE. Net of depreciation. What is the PPE? 2,10,000 is the PPE. 5,000 per month is the depreciation as given in the problem. So 3 months, so 15,000 gone. This is going to be my PPE out there, and that's all what I'm going to have. And this total is going to be my total assets. This is going to be my total assets out there. Let us look at my liability and equity out there. Liabilities and stockholders equity. Accounts payable. We did have our accounts payable here. Accounts payable at the end of the quarter was basically calculated out here. Let's go and look at that figure out there. Yes. My common stock. What is my common stock? My common stock remains the same, 327,000. Yes, because there has been no issue or anything. Then what happens? My retained earnings. So what is going to be my retained earnings? My retained earnings as per the balance sheet is 99,900 plus this 84,000 of the current. Now this is the thing. Now let me look at the total in this case. my total of my total liabilities and stakeholders equity, total liabilities and stockholders equity is the same figure as I have out here in this particular case. That is what we see. This is how the balance sheet is prepared.